The Ethereum spot ETFs are finally set to launch today, further legitimizing the crypto space with legacy markets and institutional investors. And it's launching to such fanfare and excitement. And actually, nobody's really talking about it. They're all talking about Donald Trump and the fact that he's going to be in Nashville for the Bitcoin conference this week. Why is the excitement so muted for the Ethereum spot ETFs? It should absolutely be a huge day with 8 issuers getting these approved and trading. I'm going to talk about this and likely a lot more with one of your favorite guests. I would say my favorite guest, but he's also one of your favorite guests, Mark Yusko. Today, of course, you got the Arch Public guys on the back half. Let's go.
Let's go.
What is up, everybody? I'm Scott Melker, also known as the Wolf of All Streets. Before we get started, please subscribe to the channel and hit that like button. Man, this is a huge week. I'm so excited. I'm going to bring on Mark right now. Mark, I got you today. I got Scaramucci tomorrow morning, and man, do I have questions for him.
Yeah.
Right? And not announced yet, but live on this channel and in person from Nashville tomorrow, I'm interviewing RFK. And that's the first time I mentioned it. It's just official. And I can tell you it is going to be an explosive conversation based on what we've said so far that might get him in a lot of trouble. All of us in a lot of trouble. Who knows? But today the topic is Ethereum spot ETFs to start. I think you and I both, and basically everyone, didn't expect these to get approved in the first place. Right. Yep. It was this sort of like 1 hour turnaround and then this weird process of getting the S1s approved. But they are going to trade. As Matt Hogan pointed out, now these investors effectively have access to 70% of the crypto market, right? Between Bitcoin and Ethereum, you've got 70% of the market. So what does this look like to you? Like these were launching today. Like I said, not much fanfare. It's kind of
not
weird.
Not much fanfare at all, Scott. I think it's really interesting. So when they were announced that they were quote unquote approved, which meant a few steps left to get launched for trading, price of Ethereum actually went down and actually down reasonably sharply, which was a little bit surprising, but not completely surprising because the trading hadn't started and people hadn't actually started buying Ethereum. But now with launch imminent and real dollars gonna be in demand. The only thing I can come up with is the economics of Ethereum or tokenomics of Ethereum are modestly different, right? It claims to be deflationary like Bitcoin, but it's probably not quite the same, and it's not as widely held, and therefore there's probably some fear and trepidation about whale dumping and things like that would be my hypothesis.
Yeah, I agree. I mean, if you look at what happened with the Bitcoin spot ETF launch, and it certainly doesn't have to rhyme, but you had this quick move up, 47 to just under 50, and then sustained selling from GBTC and way down, 20+% down to under 40,000 over the coming weeks, right? And ETH, I mean, we should talk about this because I know I have it somewhere here with the fees. But let's take a look at the fees that have been proposed here, right? We got the Ether ETF fee wars. Everybody, 25 bips, 15 bips, fee waivers. I think there was a story here that Bitwise giving 10% to core developers like they did with Bitcoin. And then you have Grayscale, 2.5%. That's 10x the highest competitor like BlackRock. And GBTC sold off for weeks sustained to the tune of billions of dollars when they were at 1.5%. So explain to me how this is not mega selling pressure into an asset with with more volatility and less volume.
Yeah, well, so the only reason it's not mega selling pressure is taxes. So the average holder, meaningful holder, has been in the position for a while. If they sell, they're going to get a big tax hit. So they're like, well, do I just suck it up and pay the fee, or do I take the massive tax hit and get a lower fee at one of the others? And what we saw with Grayscale was the vast majority of holders said, nope, not going to take the tax hit. And I think in ETH, it's even worse because it had more of a parabolic move. So those early investors, there's no incentive for them. And look,
and the discount's already closed. So people
yes.
were waiting on since GBTC was such a fast process, they were only really able to get out and take advantage of the discount right at launch. Yeah. Here, you've been able to sell ETH for quite a while now with a closed discount.
Yep. Yep. And look, the other thing I think is, this is my theory. That's all it is. I don't have inside knowledge, but it's my theory that I will argue that Grayscale is in a controlled demolition liquidation.
I think that's clear.
They basically were well, again, my thesis. I don't get no inside knowledge. No, and Barry might smack me if I said this, but I think that someone came to him and said, "You know what, we got you, and we could go after and cause a lot of pain in your life, or you can slowly feed the beast, which is BlackRock, and just hand over your Bitcoins to the new big dog in town and charge a really high fee while you're doing it." That's my thesis.
Yeah, it makes a lot of sense. Of course, they have the ETH mini product this time, which wasn't there last time. But to my understanding, you can only move 10% of your ETH into that. So for people who are saying, hey, they have this other product with lower fees, okay, it removes 10%. That said, let's exist in a vacuum here. Let's not worry about what may or may not happen with Grayscale. Yeah. I tend to agree with you. The consensus is that parts of Grayscale's business, or DCG's business more specifically, have had some trouble. I mean, we know about Genesis. Everybody knows they sold CoinDesk, all of the above. And that these have been their cash cows, right? Because everybody's been trapped. They have high fees. And that's not going to exist in a competitive environment. So they need to do some calculus as to how they're going to wind that down and survive. But let's exist in this vacuum. These launched today. Everybody's excited. What kind of expectations do you think we should have? A lot of people have said, listen, it's a third the size or 25% the size of Bitcoin. It'll get 25% of the inflows. Simple math. I have my doubts.
And look, I have my doubts too. I think it's a logical argument. I think the difference is, for most of the biggest dogs, right? So this is the wolf of all streets. So if you go down all the streets and the back alleys, right,
you find BlackRock. At the end of all
BlackRock. Yeah. And you look at all the different types of buyers. The individuals probably will migrate here because they believe, particularly if they're listening to Raul and others, that ETH has more upside than Bitcoin. So okay, fine. I mean, mathematically, that's true. I can poke some holes in that, and people are going to do a good job poking holes in that the next 3 days when we're in Nashville. So, but as you start moving up the value chain of larger purchasers, I just think if I'm a big institution, a big sovereign wealth fund or a big pension or an endowment, and I've had to go to my board and convince them that this crypto stuff isn't for drug dealers and criminals, and that it's really an institutional quality investment. I don't know if I want to go through the whole story again and convince them that, oh yeah, Ethereum it's kind of like Bitcoin, but not quite. And it's about a quarter the size or half or a third the size. And so I should have 3/4 Bitcoin and 1/4 Ethereum. I don't know. I'm going to take the under on how many people are willing to go through the brain damage.
I think we also have a cycle issue, right? I mean, this is just that part of the cycle where nothing moves price. I was talking about this yesterday. It's kind of astounding. Bitcoin sitting now at 66,300, right? We've had all this talk about the thawing of the White House to crypto, which we all know is nonsense. But we've certainly seen Donald Trump make a wholesale reversal. We've seen Bitcoin on the main stage. We've seen everybody talk about self-custody and CBDCs and crypto. Price is the same or lower than when Trump made that pivot. That's how strong this part of the cycle is. Right? That's how strong the post-halving, boring, nothing happening, and they're launching ETH into this. The Bitcoin spot ETF launch was the most hyped single launch of any product in the stock market ever, arguably.
Yeah. Well, and look, it's Paul Romer, famous professor who won the Nobel Prize 5-6 years ago for something called the law of increasing returns. And it basically says it's not the best product or technology that wins. It's the one that gets critical mass first. And so this is, I love to quote Top Gun because it's my favorite movie, and Top Gun Maverick is even better than Top Gun. But the original Top Gun has this great line, right, where he says, this school is all about combat. There are no points for second place. And so it's kind of like that with the ETFs. It go big or go home, be first or don't. And it doesn't mean that they won't gather some assets and $1 billion here, $1 billion there. It's real money. But I think maybe the BlackRock gets some because they've done a good job educating a few of their clients that they should have a diversified portfolio. Fine. And maybe a couple of the guys with the low fee will pick up some, but I just don't think there's going to be the same demand. I mean, so that's just on the supply demand dynamics of ETFs. First wins, first mover.
Especially
and yes, they're different, but they play the same role in a portfolio. Yes, they're different technologically, and yes, they're different as blockchains. But the real issue for me on ETH is, I ask this question all the time of people, if ETH didn't exist and it was invented today, would anybody use it? And I think that's a hard question to answer because you have things that are better, faster, cheaper. And the argument for ETH, which is a strong one, is, well, it was first and has the most developer activity and the most installed base, and therefore it got critical mass first, so it won.
And the AUM. Yeah, and the TVL, excuse me. Yeah.
So, but I listen to the Solana people, and I think Solana as a network still has a lot of flaws, bugs, but the TVL has gone back up and the price has gone back up, and you can, so the experience of moving a stable coin over Solana versus over Ethereum, way better. Just way better, right? It's cheaper, it's faster, it's easier.
I don't even think that can be argued. Like in a vacuum, if you just want to send money to someone, you look at it. And you know what? Even outside of Ethereum and Solana, this theory that people just want cheaper, faster, and easier is proven because most people are sending their USDT around the world in Tron. And nobody cares about it.
Yes, no, that's a great point. That's a really good point.
Faster, cheaper, easy wallet, do it. Doesn't matter. They don't care about the dynamics or the what the platform is or the decentralization. They just send it on Tron, to be quite honest. So, but I mean, I think that Ethereum does, and these ETFs do actually exceptionally well over time. I just think it's going to be a longer educational curve, to your point. I think the pitch is just going to be, look what it does for your Sharpe ratio. As you and I have talked about for Bitcoin, diversify a little bit. I don't think having to educate them on exactly what it is what's going to do it. But I do want to also talk about the Bitcoin ETFs and BlackRock specifically. I don't know if you saw this, but yesterday BlackRock did 527 million in net inflow. I mean, the price hasn't moved, and IBIT did 527 million. And this one blew my mind. BlackRock's Bitcoin ETF has surpassed the NASDAQ ETF QQQ in flows this year.
Yeah. Yep.
This is insane.
No, it's insane.
And that's just one of them.
Yeah. And it's incomprehensible given how people talked about this before they were approved, right? That these were going to be speculative, flash in the pan, not interesting to institutional investors. And I think quite the opposite. Basically what you've created. And so those numbers are a little fuzzy. It's like, millennium, right? Oh, we have, 2 billion of Bitcoin ETFs. Well, kinda. On that day, the net long position might have been 2 billion, but they don't have to report their shorts. So you don't really know how much they're short other stuff. And so I think what's happened is you've created a highly liquid, very efficient trading tool that very large institutional traders like Citadel, right, which is quietly, I think, scalping in these markets like they scalp every other market because they're geniuses. I think that's the misunderstood part of the story is that it's not that the institutions are buying and hodling. They're rapid fire trading and scalping little pieces between exchanges across blockchains.
Arbitrage and cash and carry in a way that
Yeah.
they couldn't do it before. So even if we see these huge inflows, there's a position on the other side.
Yeah.
And
And
so
well,
the
the
price
thing
is
that's
not moving massively.
the spoofing problem is real, right? Which is there is I can't remember, I think it's like 10% annualized difference between the spot price and the future price. And that's why if you look at the futures based ETF products in the traditional world, they're just wealth destroyers, right? Because they have this roll yield problem where you roll down the time curve and you lose money, and so they just constantly chew up your gain, and literally they destroy 99% over a long period of time. Now, as a trading tool, they're great, and you can use them for hedging and all this stuff. But futures based products have this roll yield problem. Well, the flip side of that is if I go long the future and I go short the underlying, I can capture that spread, and I can do that over and over and over again, and basically make free money. Now you have to have money to make money.
Funny how that works.
But think about gold. That's why gold prices have been so stable for so long, despite the increasing demand for gold. The price doesn't move because these spoofers are out there, clipping coupons.
Speaking of having money to make money, let's talk about BlackRock. They've got over 10 trillion in assets under management now. A cool 10 trillion. No big deal, right? They're obviously extremely actively participating in this market. Larry Fink continues on the roadshow, seeming to become more of a Bitcoiner every day. But should we be wholly excited that BlackRock is so deeply in this market? And
that's a great question. So look,
much
the answer is yes and no. Yes, we should be excited that the largest manager in the world kind of gets the joke, and that they have a product that is increasing the demand for the asset that we all know and love. The no is not all of their demand is real, meaning it's not all for spot. It's much of it is in the futures market. And look, I talked about this. I think you and I talked about this right before the launch of the Bitcoin ETFs. Very unreported, under-discussed on January 10th was a release of a number of new futures contracts on the CME. And I warned people that was going to put material downward pressure. And it goes back to a quote from Leo Melamed, who's the head of the CME, from I think 2017 or 18, where he said, "We'll tame Bitcoin." And tame is a very intentional word. And this whole thought that the creation of ETFs and the creation of new products around the asset are only going to be number go up is ludicrous, because what happens is if if everything was demanded to play in the spot market and new capital comes in, number go up. But that's not the way it works in a futures-based market. And when in the old days, if I had oil to sell to you, I actually had to have the oil to deliver to you, right? Because that was the way it worked. I sold you oil, I pumped it out of the ground, and I put it on a truck and I sent it to you. Now I don't have to do that. I can write a contract that says, yeah, I'm selling you this paper oil. And if we settle up the contract before the delivery date, I don't ever have to get any oil. So you create out of thin air by fiat, it's just like fiat currency, you create artificial commodities. And so you've seen it in agricultural commodities or metals or oil, where you get these weird dynamics around the big money players manipulating, and I'll use that term intentionally because they've been fined billions and billions of dollars for that manipulation. But as JP Morgan said, they got fined $1 billion. And they're like, yeah, fine, but we made 20 bill. So it's like 5%, it's cost doing business.
Yeah. That leads me to the fact that because I'm interviewing RFK tomorrow, and we'll be talking heavily about the Fed and their policies and how it works. And Caitlin Long is joining us to give color and fact checking, interestingly.
Nice.
I've gone on a very, very no sleep for the last 24 hours because it's making my head spin, kind of deep dive into the Fed when we talk about money printing. And holy crap, is it corrupt and insane. I mean, this is one of your favorite topics.
Oh, it's my favorite topic. Look, and look, I literally just got back. I took this 2-week break, probably the second time in 20 years, but I did it, and I didn't do Twitter for 2 weeks. I didn't do email for 2. I mean, I went on break with my family and totally unplugged, which was amazing. But we went to Italy, right? And what people don't understand and appreciate. So, we're touring the Pitti Palace, right? Which was the Medici's palace. And they pilfered the most unimaginable, other than the Vatican, the most unimaginable collection of art and artifacts that the world has ever seen. Well, how did they do that? Well, they did it by being the precursors to central banking, right? They were the original bankers. And it was the Dutch in 1607 that created the first central bank. And I always say, think about this. So the Portuguese were in charge. They had the Illuminati, the Knights Templar, and they had the most powerful navy. And then the Spanish conquered them, and then the French conquered them. And then suddenly the little Dutch came and conquered the French. Like, well, how can that be? Well, it's because they created this bank based on these ideas that the Medicis stole from the Knights Templar, that you could have this banking relationship, and they created the first bank that could create fiat currency that didn't have to be backed by gold in the vault.
Yeah.
And therefore
war's a lot easier when you can just print new money.
War is way easier when I can pay my soldiers. And to that point, the reason Rome fell, right, is not because they were stupid and corrupt, and all those things are true. But the reason they fell is the emperors of all the different districts that they had conquered all wanted their own Colosseum and their own circus and their own. So what they do is they literally melt down the coins, which were pure silver, the denarius, and they would add other metals and create more coins. And the soldiers were like, what the fuck? These are not as worth, so we want more coins. And so there was this hyperinflation in the cost of foot soldiers. And at one point, the foot soldiers said, nope, you don't have enough, bad coins to pay us. And once they stopped working, the Huns came in, end of Roman Empire in 457. And so it was a long time from 457 to 1200 when the Venetians took over the banking system. And then the central bankers in the Netherlands eventually led to the central bank in the UK, run by the Rothschilds, which eventually led to the Rothschilds seeding the Fed, literally set up the Fed with the son of Junius Morgan, JP Morgan, and the rest is history. So it all goes back to the Fed is
so
a
nuts.
corrupt political organization owned by a bunch of wealthy European aristocrats. It is not federal. It has no reserves. It is not a bank. It is not a government agency. It is a corrupt political organization run by the wealthiest, most global families in the world. That's what it is.
What if I told you that there were people out there who are actually deciding monetary policy for the United States and earning a 6% dividend for any money that they print and hold in their bank, and that the president and government have no official oversight or ability to fire those people? Would that interest you?
That would be truth.
I mean, if only there was, like, just spitballing here, if only there was some new asset that was not under the control of these people, that was decentralized and you could put your money to and generally appreciate it over time.
There is this thing, Scott, it's called gold. The problem with gold, right, is if I had a bar here and I wanted to break it in half and give you half, I mean, one, I'm not strong enough to break it in half, and two, I couldn't stuff it in the computer and send it to you. So we have had for 5,000 years an asset that breaks that monopoly, which is why they made it illegal in 1933 with Executive Order 6102. But Bitcoin is better than that, right? Bitcoin is infinitely divisible, infinitely portable. And here's the other thing about it, right? Every dollar sent across international borders, everyone has to go through either one of two banks, both of which are owned by those same families. Why is that? Well, because a treaty from 400 years ago mandates that.
People are calling us conspiracy theorists in the chat. Guys, go look it up. Literally just read about it. Read about the crash of 1907 when we didn't have a central bank. Read about who bailed out all the banks. It was JP Morgan himself.
Yeah.
And
John D. Rockefeller.
The
buddies.
1913 Federal Reserve Act was effectively a response to that. And because there was concern that it would be all entirely private and controlled by Wall Street, or that it would be so centralized by the government, they made a quasi-hybrid model where private banks, the 12 banks.
Well, Scooter, you know what's so funny about this is it's only a conspiracy if it's not true, right? Truth is an absolute defense. If you go back to the founding of the United States in 1776, we had two 20-year periods where we had the first National Bank of the United States and the second National Bank of the United States.
Yep.
Both of which boards were controlled by the same European wealthy families. So Andrew Jackson, right, who's the Donald's, hero, said, "Fuck to the no. I'm not renewing the charter for the third national bank." And we went through a 40-year period where there was no central bank, there was no national bank, and we had what was called the free banking era. And again, this is not a conspiracy. These are facts.
And everyone, wildcat currencies. Yeah, I mean, everybody
had their own money.
Good times. Yeah.
Procter & Gamble had their own money, and Texas had their own money, and GE had their own money, and all these companies had their own money. And it didn't work. And so then they renewed the charter of the national bank at the end of that, after the Great Depression, like the bigger depression than the Great Depression in 1860s. They renewed the charter, and long story short, in 1907, there was a trust called Knickerbocker Trust that was taking share from JP Morgan, and JP Morgan famously said, "I like a little competition, but they need to go." And he spread the rumor that led to the picture that we've all seen of the run on the bank with the umbrellas and the people in dresses and ties. And they went out of business. And the Trust Act of 1907 made JP Morgan the go-to de facto, because he and John D. Rockefeller put up $25 million of their own money to bail out the system. And then John D. Rockefeller's father-in-law was Amory Aldrich, who crafted the Aldrich Plan, which took 6 years to get through, funded again by these European families. And they established the Fed. And I love this part. They signed the documents on Jekyll Island. right? You can't make that up. The creature from Jekyll Island. And look, you can argue about it, and we can say, no, this is not. But it's all just truth and facts. And you can check the links to Junius Morgan and the Rockefeller family. That has nothing to do with religion or it has to do with money. It has to do with money and power.
Well, imagine if we had an asset. Okay. This is the reason. This is what Bitcoiners talk about. And I have to say, Mark, like, I know I'm over time, and I'm sorry, but I can't. I have to say, like, this is why I don't care who your favorite politician is or who your favorite institution is. But when they start talking about Bitcoin, I get the little, like, my hairs start to stand up.
I'm with you. So, look, at the end of the day, people are going to talk about what gets them votes, whether they believe it or not. The good thing is for the next 3 days, we're going to be in Nashville with all the people who actually do care about this stuff and a couple of people that don't. They're just trying to get votes. But most of us are going there we're going there to celebrate this innovation. Look, what Bitcoin is, it is the greatest innovation that we'll probably see in our lifetimes. And it simply makes value bidirectional and swaps trust for truth. We don't have to trust the Medicis. We don't have to trust the Morgans. We don't have to trust the Rothschilds. We don't have to trust anybody. You and I can exchange value seamlessly, efficiently, in any place in the world. And that technology, that distributed ledger, cryptographic secure technology, is a world changer. So, hey, I know we're over. Thanks for having me, and I'll see you in Nash Vegas.
Because I have bad ADD, I was DMing you while we were just talking there to say that we need to get together and do this in person because we're going to have a setup there. So let's schedule time.
All right, I'll do it.
Awesome, man. Thank you so much. Guys, follow Mark for more history lessons.
Thanks, buddy.
Bitcoin. Thanks, man. See you soon.
Yeah, bye.
All right, and now obviously for another person who's going to be in Nashville because they're one of the sponsors, Arch Public. Andrew, dude. Are you sleeping these days? I mean, you got to be getting revved up and ready.
Listen, man, in the last week, you've had 2 guests on, and I listened to most of what Yusko just said, and all the truth involved in that conversation. Between him and Caitlin Long, the value that you're bringing to your listeners and your viewers, however we categorize people on YouTube, is pretty significant stuff. Right. I mean, understanding the banking system, understanding the Fed, understanding the corruption associated with all of it is if you're not convinced at that point to buy Bitcoin and as much as you possibly can in a reasonable way, I don't know what to tell you. Right. Like, I don't know what to tell you. Those folks are as wired in as they can be. Yusko on the institutional side. And Caitlin Long started an actual bank, right? An actual bank, and has tried to push it through the system in the way that it's supposed to happen, and has found herself in the midst of the corruption of the Fed itself, time after time after time. And so those folks are absolutely to be listened to be followed. Whenever they say anything, listen up. And be very, very aware. So kudos to you for having them on your show. It's real value add.
And I literally, as a result of that, thank you very much. As a result of that, I got this RFK interview locked in for tomorrow. Mm-hmm. It's going to be at 5:30. It'll be live actually here.
Awesome.
A whole thing on the street. But I invited, we got permission to invite Caitlin along.
Oh, that's awesome.
So it'll be me interviewing the 2 of them, but because the bulk of the conversation will be about the Fed, I wanted to make sure I had a real expert there to vet, confirm, discuss, and make sure, because one of the hardest parts about being an interviewer or a moderator is you can't know everything about everything.
Right.
And
correct.
Your guest is inevitably going to say things that you want either vetted or fact checked or a deeper conversation on, and you can only know so much.
Well, between the reason why it's important to have Caitlin in that conversation is, RFK is worm brain guy, your podcaster nitwit guy, and Caitlin's gigabrain. Okay, so that's the truth of that conversation. All right, can we agree to that? Caitlin has had such a long history in traditional finance. People don't know this. Like, people think that, Caitlin's Bitcoin bank, personality. The reality is she spent more than 20 years at Morgan Stanley, and even previous to that, Salomon Brothers, which was purchased by Morgan Stanley. All the Salomon Brothers
didn't go too good for Salomon Brothers.
No. In fact, all the former Salomon Brothers people hate the fact that Morgan Stanley bought them, and still hate Morgan Stanley. A good portion of them left after that transaction finalized. But she's remarkable. There's often times where she puts out tweets that should get tens of thousands of impressions and likes, and they go fairly unnoticed. But they're the smartest, most accurate, pinpointed parts of the conversation associated with what's going on from a financial standpoint, in our country. And very, 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 very smart and very, very educated, not just from a traditional education, but just experience. Right, her experiences inside of the system is important. People should really listen. Same with Yusko, right? Guy is as wired as it gets from an institutional standpoint. By the way, I 100% share his thoughts on the potential lack of velocity associated with Ethereum ETFs.
Yeah,
I think it's great that they've been approved. I think it's great that they're going to trade. I think it's going to be an uphill climb. You also know my thoughts on one of the reasons why it's going to be a bigger uphill climb than people think is because the outflows from Barry's, Grayscale product is going to be a problem. They have worked overtime on the PR with their mini trust. I hesitate to say this because I like these guys, but heaven only knows how much Barry has paid Bloomberg and other outlets to be very complimentary of what they're trying to do with the mini trust. But it's going to be an uphill climb because, like Yusko said and you said, there's a first and best, and it's hard to. Here's probably a good analogy, right? So there's a lot of people that are comfortable buying Hondas and Toyotas, and then you had Hyundai and like Kia come into the market 30 years ago. Those brands didn't take off in the United States just as a quote unquote proxy as other Asian type vehicle products because, if Honda and Toyota are great, then Hyundai and Kia should be awesome too. Let's go buy some of those because they're a little bit cheaper, but they kind of do the same thing.
Korean cars are awesome though. I'm just saying, like those, dude, that's last.
So it took a long time for those brands to get any.
I had a kid Telluride for a while. That thing was awesome.
Yeah, well, yeah. I mean, that's kind of the whole point. My thesis has always been short and medium term, the Ethereum ETFs are going to struggle. Long term, they're going to do well. I think.
So is Bitcoin a Honda and Ethereum is a Kia?
Is a Kia. Yeah, that's right. Yeah.
Who's got like the G-Wagon and the Lambo?
Well, I don't. Yeah, that's a good question. I think Bitcoin is.
But yes, I mean, honestly, like you could say Bitcoin is a Lambo or a Ferrari, but it's not. It's the old, reliable, steady Honda Accord or Toyota Camry.
Well, given that the fact that it's stated an average price of about $65K for the last 4 months, the reliability and sort of tried and true kind of actually works. I will say though, and I put this out yesterday, the sell in May and go away is over. Larry Fink is back at his desk, and so gobbling up $500 million in Bitcoin in July. Now imagine that it's September and October, and everybody
high not to buy in July.
Everybody's going to be back at their desk.
Got to remember to buy in September.
Yeah, it is. It is a foreshadowing of the size and scale by which the Bitcoin ETFs will continue to outperform and continue to gather assets, because again, everybody's going to look at it and say, Ethereum, I don't know this, but you know what? I've heard of Bitcoin now for a decade, and I know the name. I understand the brand. A lot of reputable people, you know, have changed their minds on it. So, all right, you know what? I'm going to throw, you know, whatever percentage of my portfolio into it. 0.5%, 1%. Well, 1% across trillions of dollars in wealth just here in the United States is a lot of money. It's a lot of money.
It's a lot.
Yeah.
Yeah. Okay. So let's talk about Arch. So we shall be buying Bitcoin. Listen to Caitlin, Mark. Well, you'll be able to buy it.
Yeah.
Dollar cost average it every 3 milliseconds.
Yeah. So we're going to make an announcement at the Bitcoin conference. I think our press release might actually go out today. It's been under embargo until today. You know, our Bitcoin algorithm is going to come out. And to be fair, our Bitcoin algorithm is going to come out, and then there's going to be a couple other versions that will come out over the coming months as well. But initially, it's going to be a DCA tool. So it's going to be a tool that will allow you down to every 30 seconds to DCA into Bitcoin in whatever percentage of your portfolio, or every hard dollar number of your portfolio that you want it to be. And at the same time, it's going to greatly reduce the cost of making those purchases versus some of the other platforms that are out there that allow you to buy once a day. I can't get into, you know, can't completely pull the curtain back as to all the platforms that we're working with for this to be able to work on different platforms. But I do believe, you know, over the next 30, 60, 90 days, you're going to be able to use this tool to both buy Bitcoin ETFs in a DCA way and spot Bitcoin. We're very, very encouraged with the conversations that we're having and the excitement that we're receiving from those institutions that want to partner with us and give people the opportunity. Here's the way I used this yesterday in talking to an institution. Like, if you just use this tool, you know, and twice a day you were making a purchase. 18 days ago, Bitcoin was at 54, almost 53,000. It moved all the way up to 67. Now it's at 66 and change. In just that time period, think about the smoothed out level by which you're buying Bitcoin versus, oh no, it's at 54 and it's moving down. Should I buy it now or no? Well, it moved up to 57, but it was just at 54 and it was at 67. Which way is it going to go here? I have no idea. How are you making those decisions? The ability to programmatically decide on how you're going to buy Bitcoin and almost set it and forget it and create a position inside of your portfolio, that is the most powerful way to buy the most powerful asset over the last decade in the world of finance. So we think it's going to be a powerful tool. We're going to make it affordable for people. We're going to let them use it, and you're not going to have a quote unquote minimum amount of investment to use the tool. If you've got $200 in your account and you want to buy $50 worth of stuff over the next 4 days, you can use the tool. So on top of that, our algorithms last week, Thursday, did some really cool stuff. We had 3 of our algorithms pop off on the same day. And the interesting thing there, and this is what we tell customers in our upper tiers of our ecosystem here, in our concierge program, is you're going to get uncorrelated results. Well, what does that mean? So you're looking at 2 S&P algorithms and 1 Dow algorithm. The 2 S&P algorithms took a short and profited. The Dow algorithm took a long and profited.
So I'm seeing the Dow's in the middle here.
Yeah, that's correct.
Bottom, just based on these are the trades right here. Yeah,
correct. The Dow was in and out inside of about 35, 36 minutes. And then the S&P algorithms took about 70 minutes to execute their particular trade. So in total, if you were in those algorithms, as people are in our concierge program, you generated a little more than a 6.5% return in 90 minutes. So very powerful stuff, uncorrelated results. People continue to be extremely happy with what we do and how we do it. And oh, by the way, you know, you could have been living on the moon and those things would have still happened in your portfolio. You don't have to be at your computer. You don't have to talk to anybody. Yeah, well, that's a phrase I like to use.
Is that going to be one of the announcements at the Bitcoin conference?
Yeah, of course it is. Of course it is. Everybody thinks Elon Musk is going to be there, by the way, which I doubt. Would be cool if he is. But
I would take the other side of that.
You're going to take the other side of that? You
Yeah.
might know more than I do.
I'm not. I mean, it's still unsubstantiated rumor, but I think I would take the other side of that.
Well, we are going to, we're going to hang out with you for a bit at the Bitcoin conference, and we're going to have some customers there that are going to enjoy themselves. And it's going to be a good time Thursday evening, having a dinner with some important folks. One of those important folks being Scott Melker and his wife. And it's going to be a good time.
I think she's wearing a cowboy outfit.
Oh, wow.
Non-sarcastically, cowgirl. Sarcastically. She's like, I have one day in Tennessee. We're going to karate combat. I'm going to wear a cowgirl outfit. I was like,
no, please. If you do, I know where to take the pictures because I've spent more time in Nashville than I should. There's this mural that's a very well-known spot. These big wings. And I kid you not.
Cowgirl with wings.
Yeah. I kid you not that there's a line of women that
wait because that's their Victoria's Secret moment.
Oh yeah, it's something. Nashville's something. It's a spot, no doubt.
Wait. I love my comments, by the way. People are like, dude, you're not the right guy for this interview. You're too jokey. I'm like, dude, guys, I know this is hard to believe. It really is, but I'm actually a full-grown adult. And I can keep a straight face and not make jokes in serious.
Well,
it happens. This one here. I hope you're not as loud as you are now. 10 times louder as your guest. It's live, guys. Okay, let me explain this to you. It's at 5:30 p.m. Eastern Standard Time tomorrow. I will be sitting with him.
Yeah.
The sound crew doing production. Nothing to do with me. It will be broadcast live, but it is an in-person conversation.
It's always interesting, the comments from, let's call them reply guys that are interested in content and interested enough to comment about the content and will consume the content.
They're just looking out for me, though.
But at the same time, complain.
They're here. I'm happy. Listen, they're here. They're giving me constructive feedback. I'm just the overwhelming point was, guys, I got this. I got this. I got this.
You've been doing this a while.
They chose me. I didn't choose them. You know what I mean?
Yeah, it's our Bitcoin algorithm will be rolled out to our current customers at thearchpublic.com next week.
I hit that right when you said it.
Yeah, perfect timing. And I will say that people that are just in our entry-level product, our $99 product, again, for 3 successive months, have seen very, very positive returns and are up a significant amount. Very, very happy with what we do. And again, the idea here is it's hands-free returns. You're simply, 3 steps, you set up, you're trading your 10K, and then off you go. You just get updates on your phone, and it's people have responded in such a meaningful way that we continue to take their feedback associated with, have you thought about this product? Have you thought about that product? We do an evaluation of, is that something that we want to put in people's hands? So love the community that you've built, Scott, and working with your folks, and gonna be a fun week in Nashville.
I like you a lot.
Thanks.
Yeah, I can't wait. So, guys, the dinner for the few that there Thursday, but we're gonna also coordinate a time for me to come to the booth and hang out there, and say hi to you guys and stuff. So, really looking forward to it. Andrew and I have never met in person.
No,
so you could be there for our first fist bump. I will not be growing a beard by then, but
it will be. We'll make sure that we get a picture of you standing in between Tillman and I, because I think that will be a remarkable moment. It'll kind of look like.
I mean, I'm still 6 feet tall, but I do find that but I'm very, I'm slender. I do find, and I say this every time I go to a conference, it literally pisses me off. People in crypto are really tall.
Yeah.
You don't think so? You talk through a screen. Very rarely is somebody shorter than I think they are through the screen. That's all I'll say.
Yeah, I have a couple of female friends that will be joining us at the.
How tall are you?
6'4".
She's fucking 6'4". And give me a break, man.
And Tillman's 6'5". So between the two of us, we're not small individuals. And the female friends bring to the dinner and then to the conference as well. I'm like, listen, you ladies are single. I'm just letting you know that there's 90% of the people here are, meat-eating, masculine, bearded gentlemen.
Yeah, your Vikings. Your Vikings. So to that end, like in theory,
Uh-huh.
okay, I want to line this up in my brain.
Mm-hmm.
With a 10-yard running start for me,
Uh-huh.
how wide of a space do you think I would need to potentially get past you and Tillman?
I mean, depending on what we're allowed to deploy to not get you past.
Oh no, it has to be just us. There are no weapons.
No weapons and no meaningful.
I've seen the nope, Tillman.
No physical harm at all. Okay.
No, you can physically harm me.
Yeah, you'd need a solid 10 to 15 yards. Yeah.
Why?
Because here's the thing. Tillman was an All-American at the University of Texas.
I know.
The ability for that man of that size to move the way that he does is hard to quantify. And I played Division I basketball. I didn't play football. So I don't know, man. We may,
Oh, so I get to dunk on you instead. That's even
better. For sure. Yeah, Tillman is not great at basketball. I've seen him attempt to it's not pretty.
We're gonna do one of those photos where like I'm on a stool and they cut off our feet. Tall, man. It's awesome. All right, I gotta go. I got spaces to do. So guys, listen, tomorrow, first of all, AP_abacus to follow Andrew, the Arch Public, right there, to check all this out. But tomorrow morning, just a reminder, I have Scaramucci on the normal time at 9 a.m. Eastern Standard Time. Then I'm rushing off to fly to Nashville literally 5 seconds after the show to be there to do an in-person interview with RFK. I don't ask you guys for much, but they insisted this be live.
Yeah, great stuff. Good.
I would have obviously liked some recording and editing, and this will be live. I need you guys. It will be here, but also all over X. I need you guys to share the shit out of it.
Awesome.
That's all I'm asking. It's going to be. This is like going to be the big announcement of what he has going on. I need you guys to share it.
Love it.
People asking, is this about Ethereum or no? Listen to the beginning. Yes. All right. That's all I got for you guys. I will see a lot of you in person. Definitely you in person, Andrew. Thanks, guys. Bye. Tomorrow morning.
Let's go.